Hey everyone, welcome back. Hope you guys are having a great Thursday. Thank you so much for coming in to watch this video. And in this video, we're going to talk about a couple of things. So not much news going on as far as miners for production or quarterly results. So we're going to not talk about those today, but we will take a look at what's going on with Bitcoin today. Obviously, it was down a little bit. Miners were down a little bit as well. We'll just take a quick look at it. And then we'll get into my thoughts on HODL, or should miners be selling all their Bitcoin? Should be they selling part of it? Should they be HODLing all of it? I'll give you guys my thoughts on it, my kind of reasoning behind what I think miners should do. And then we'll also take a look at the market, well, not really the market cap, but you could say like the network hash rate cap for the Bitcoin miners compared to the overall network. We'll take a look at for the numbers for October, and miners are down. So a little concerning there. We'll take a look at all the data that we do have. We'll go through the charts, and we'll call it a day. So it should be a pretty easy day. And as always, you guys know the drill here, not financial advice for entertainment only. Please do your own research as always. And I'm invested in following coins and companies for full disclosure. I did not buy anything today. Didn't have the cash to do it. So maybe later on this week, if things stay a little bit down, I will do that. Also, if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. Helps the YouTube algorithm, as you all know. So if you could smash that like button, would help me out. All right, so first, let's take a look at what's going on with Bitcoin here really quick. We obviously pulled back quite a bit from the gains that we had yesterday. So today we were down approximately, well, we were down 4.55% on the day. Yesterday we were up 6.56% on the day. We came all the way down to where we pretty much started out the day yesterday, which was around 35,500 or so. We bounced off of it a little bit today towards the end, which was nice. And then we're up a little bit here in the new day as it is right now. The good thing here that I'm still seeing, however, is Bitcoin. If you look at the day before, so this was probably what, Tuesday? Yep. Tuesday, the RSI ended up at right around 62. Now the RSI is at 59, but price is much higher. So I think this is still pretty bullish for Bitcoin going forward. I think we're going to possibly test this 38,000 mark here a couple more times before we possibly blow through it. But we'll have to see how this is going to progress. It may bounce and it may go down also. So there's always that theory. Okay, looking at the 4-hour chart, we can see here that we were definitely oversold yesterday. We bounced back up today or yesterday. And then today we're coming back down a little bit here on that one. That one looks pretty good. 1 hour, same thing. We're at the bottom here right now. Price is higher than where we were at the bottom of the RSI here prior as well. So that's still looking pretty good to me as well. Now, as far as the miners are concerned here, the miners had a pretty rough day today, with some of them being down single digits, some of them being down double digits. Only two were up today. Argo and Soluna was up today, just slightly. About 3% on both of those. The ones that have done the worst here, I'm not going to go through them all, but Hot 8 was down 7%. Greenwich was down 6, DMG was down 7, CleanSpark was down 7.5 roughly, Cypher was down 13, and then Bit Digital was also down 7.5. Others were a little bit down below that a little bit. Okay, so that's basically it. We'll have to see. Like I said, we're still in this early. We still have at least a good, oh gosh, a year to a year and a half before we possibly see the peak of the next bull run, if not maybe a little bit longer than that. But we'll see. The halving event is coming up in April, so this is obviously still leading to a lot of uncertainty in the miners. Only thing that might change that is the spot Bitcoin ETF. When that does get approved, when that gets approved, I think that might be the catalyst that we need for Bitcoin miners to actually go up before the halving event, if it happens, right? So there's still a lot of fluid things that are happening here in the market. But as always, we'll keep an eye on it. So check back. We'll see what happens tomorrow, following days, and so on. Okay. So that's it. I want to point out on that. Now, I wanted to share with you guys my thoughts on HODL. So we've heard from the CEOs, or at least if you've heard from the CEOs from the companies, they all have a little bit different strategy as far as when it comes to HODL. So depending on the company, it might fall into one of these three categories here. You either have a company or companies that sell everything that they mine. You might have a company that has a mix where they might sell some at opportunistic times, HODL at other times, and then you have basically companies that HODL everything. We're seeing less of those nowadays than we have in like 2022, where we saw Marathon pretty much HODL everything that they could. They diluted shareholders because of it. We had Hot 8 do the same thing. I think those were the two most egregious examples I could find as far as HODL in 2022. That stance has changed since then, as obviously Bitcoin has bottomed out a little bit. They started to sell more towards the beginning or late last year and into this year. They're trying to do a kind of like a, what's the word I'm looking for? a mix of the two, right? So we're starting to see that take shape a little bit more. And then you had obviously companies that sold everything and they continue to sell everything because they view Bitcoin mining similar to the way that you would have gold mining. Okay, so obviously gold miners sell everything that they mine for the month to pay operations, things like that. And they see them as the same type of play on that. However, the difference here is if you guys, well, I'm going to show up the gold chart, but if you look at the gold chart, it's been pretty flat here over the last 10, 12 years, right? So there isn't much, you could say, upside potential in holding gold, where there is, as we've seen with previous cycles with Bitcoin, you have the bear market, you have the bull market. In the bull markets, if you can hold during that time or before that, you're definitely going to appreciate the asset that you have on hand going into it. Now, the thing is to obviously sell into that bull market and after the bull market as well, so you can at least dollar cost average out on it because you're not going to be able to time it perfectly, all right? So that's kind of where I stand on this. So let's get into some of these examples here. So we got obviously companies that sell everything here, and we also have companies that have a mix. So sell everything, you could think of like, let's take a look at here, like Iris, right? We got Iris Energy. You also have companies like TeraWolf, I believe, sells everything that they own. They don't report any of that stuff being on the sheets. Also, you now have Core Scientific. Core Scientific was a big hodler in 2022. Then obviously we were having the crash in the market with Bitcoin and they started selling as well. So they transitioned more over to here, right? Not hodl everything, but they were over here, Core, sorry. Got that messed up. And they transitioned over to here where they were selling everything to basically pay off debt, get into a better situation with their finances. Okay, then you got companies like that have a mix. So recently we saw Hive obviously had a mix of it. They've been selling a portion of it all the time to fund operations. That way they're not diluting shareholders as much. We've seen it also with CleanSpark. We've seen it with some other companies as well, but these are kind of like the main ones that come to mind right now. Then we had companies like Marathon, obviously before they were holding everything. You had Hut 8 as well. And those guys have transitioned more into a mix of selling and hodling as well, right? And here's the way I look at it. I'm kind of in this boat right here. So I would think this kind of mix is the most opportunistic kind of way of doing it. You don't want to sell everything. You don't want to hodl everything. There's got to be a fine line where you can actually be able to pay, obviously, expenses, right? So you want to pay all your expenses. Electricity, you want to pay, let's see, electricity, let's write that down, electric, right? Electric, you want to pay your overhead, so all your employees, things like that, overhead, and then whatever's left, you want to be able to, if I could spell overhead, and then everything else after that, you want to be putting that into HODL. And that also depends on when you're going to be doing the HODL. It could be, obviously, in the bear market, you may want to sell more, right? Because price of Bitcoin is coming down, everything else, you may have to sell more in order to pay for things. But we've seen it with Bitcoin, at least the cycles that we have seen. It's always going to be a more or less upward trend in Bitcoin price going up, but we have these, like these little peaks and valleys as Bitcoin goes up over time, right? Or my guess is, and my thought on this is that you really want to pretty much sell when you get into these areas where you start getting a peak here and you're coming back down from a bull run. And then you want to sell more during this time frame right around here again, right? In the bear market, you want to start selling more of that stuff, and then you want to start accumulating here. This would be the accumulation phase here before, maybe a little bit before it as well, and accumulate up into the bull run and then start selling into it as well. When you do that, you actually compound you don't compound, but the HODL position value grows at that point. So as that grows, right, you can actually take that cash when you sell it later on and use it to fund the next expansion of your plan to grow into the next bear market. And you want to buy things in the bear market and sell, or buy things in the bear market, build out in that time frame to be prepared for the next halving event, because at that time, again, your revenue is going to get cut in half. So I hope this kind of explains the way I look at it, right? there's not a single proper way of doing this, but I disagree with the miners that say they sell everything and they act like the regular gold miners. That's, gold has been flat for the last 10 years. With Bitcoin, you do have these huge price appreciations in it. And if you do it right, you can definitely gain a lot more upside on your HODL position, which then increases what you have in cash, which that cash can then be used to fund the next growth phase in the bear market, right? The reason we do that in the bear market is because at that time, the cost per terahash on the ASIC miners are really low. Things are more readily available as far as infrastructure, things like that. Things are more depressed in price. You can get facilities much cheaper at that point. So it just makes more sense to do it that way, I think. But let me know what you guys think of this. This is just a quick rundown of my thoughts on it. HODL, I don't like completely at all because I think, like I said, that just basically dilutes shareholders at that point if you're doing it. There's got to be a fine line where I think the mix is a good way to go about it. And obviously selling everything is also not that great, right? You're missing a potential upside in the appreciation of the Bitcoin. So as long as you can pay for operations, pay for overhead, pay for whatever you need with selling Bitcoin and whatever's left, put it into a HODL position that's, as we get closer into the halving event and going into it a little bit as well, and then sell towards more of the upside and on the downside of the ending bull run. Okay, so that's it. I'll leave it at that. Let me know what you guys think. And this kind of looks like the drawing of a Christmas tree or something like that gone bad. All right, so that is it for that one. Let's take a look at, obviously, how the miners have performed here compared to the network hash rate. We do this, probably now, we started doing this the last 2 months or so. It's kind of interesting to see how those have compared. So in here, we look at the network hash rate comparison to publicly traded Bitcoin miners combined hash rate. So we're looking at the combined hash rate of all the miners that are here. That's like 18 miners. We still don't have 2 of the miners reporting, which I'm pretty sure though those guys' hash rate has not grown. So we're waiting for Stronghold, and also Mawson has not reported yet for October numbers. So those numbers are omitted, but I doubt, like I said, that there's going to be any significant increases in their hash rate for self-mining. And this is also only for self-mining that they have. This does not include any hosting that they provide, like BitDeer, Riot, Core Scientific would be examples of that. And there's other companies that do it as well, Mawson, others as well that do hosting as well. That's not included in this, okay? So we're going all the way back to January of 2022 with the numbers to October of 2023 with them. And we can see here that Bitcoin network hash rate has increased quite a bit here in the last couple months here. Well, this year in general has increased tremendously. But the miners also have increased as well. And just recently in the last 2 months, they've actually been coming down here. So you can see that the network hash rate at the end of October, by my numbers, was at 445 exahash. The miners themselves were at 106 exahash at that point. They did increase a little bit here from September numbers, but not as much as the overall network hash rate has increased, okay? And we saw the same thing here from August to September as well. Let's take a look at down here. Down here, so you have the month-over-month public Bitcoin miners hash rate increase, decrease versus the Bitcoin network hash rate. And you can see it here in the numbers. So September, the network hash rate increased by 17 exahash. The miners that we track here only increased by 1.5. And then in October, the network hash rate increased by 38 exahash, which is that's the most that we've seen here recently. And the public miners only increased by 1.9 exahash, right? So definitely not keeping up with the network hash rate growth here. We may see a little bit of spurt happening here later on this year when Marathon installs some more miners and gets those energized. We also have Riot growing, CleanSpark growing. We'll have also, who else is going to be growing there? There's a couple more. Iris Energy is going to be growing into it. Some of the other miners are going to be growing a little bit less, but those are the ones that are going to be adding over possibly 10 exahash in the next 6 to 8 months possibly. Okay, so we might see a little bit of uptick there. Now, when we look at the percentage of the network hash rate that the public miners command right now, it's down to 24% in October. So it peaked in August at 26.5%. And we've seen it kind of going up and down a little bit here, which isn't bad. And we're still kind of seeing the same trend happening. So we'll see if this continues going down or if we actually start bouncing back up a little bit here as more machines get plugged in for the ASIC, for the Bitcoin miners that we track. All right, but this is always good to track because that way we can see, based on this, we know that they're going to be generating less Bitcoin because of it overall compared to everybody else. And also good to see if maybe like nation states are getting into this as well. And then we also don't have numbers for like joint ventures. So Marathon has a joint ventures. Other companies have a joint ventures as well, where those numbers aren't being included in this as well, right? So keep that in mind. And then month over month hash rate increase, decrease. We can see that the miners increased by 1.5% here in September, 1.8. We're still increasing, but still nowhere near what we saw last year. In August, we increased by almost 18%, October by 16%, January by 12%. So we had a couple of good months here where we increased our hash rate quite substantially compared to overall compared to the Bitcoin network itself. Okay. Now here we can see on this chart, hopefully this all fits in for you guys and you guys can see it all. Yep. Okay. So what we have here is all the publicly traded miners here comparing the percentage that they had of the network hash rate in September versus October. So October numbers are these teal these teal bars here, and then the lime green, I guess you could say, bars are from October. So we can see that for the most, well, I'd say overwhelmingly, all of the miners have lost a little bit of the Bitcoin network hash rate percentage, except for one, Riot. So Riot actually increased quite a bit. They increased by 1 exahash of hash rate from September to October. That actually increased their share of the network hash rate, if that makes sense for you guys. Okay. So you can see it here, everybody has been losing ground, and the only one that gained ground was Riot in the month of October. They went to basically 2.76% of the network hash rate. Before they were at 2.68. So those increased quite nicely here. Marathon was at almost 4.8%. They ended up at 4.5% here for the month of October. Same thing for Core. Core was at 0.37. They're down to 0.35% right now, if you look at it this way. Okay, so that's obviously going to have an impact on their production going forward. But yeah, you can take a look at all the numbers here that you see, compare them, see how things shake up, and we'll see what happens going forward. But this is always interesting to see how they're doing. It does help us understand what's going on overall, right? There's a lot of metrics that we track here. This is just one of them that we track monthly, and we'll take a look at the other metrics as well once we get more data on some of the miners and quarterly results as well. We'll then do some numbers on those. But in the meantime, we'll do these kind of things. We'll look at this. We'll take a look at also MCAP, market cap metrics. So where's the company's metrics on that? They'll be coming up here later on. Maybe I'll do that tomorrow. If not, we'll do that later on this week. We take a look at where their hash rate is, Bitcoin's mined, things like that, comparing it to their actual market cap for each other and where they really should be if they're undervalued or overvalued on that. Okay. So that's still all coming up here. I hope you guys enjoyed it. If you did, hit the like button, subscribe, helps me out tremendously. And also the spreadsheets are going to be available to my Patreon members there. That group continues to grow greatly, so I appreciate everyone there. And that's still only $5 a month, which is a lot less than what you would pay for having coffee every day. Okay, so sign up for there, and you also get access to the private Discord channel as well. We talk about a lot of great things in there, so highly recommend it if you're interested in this type of things. Okay, otherwise you get this stuff for free, but you just don't get the spreadsheets. All right, I'm babbling here, so I'll leave it at that. I hope you guys have a wonderful evening. I'll see you guys in the next one. Until then.